to ET Now. This is Buy Now, Sell Now. I'm Karunya Rao. With me is Varun Hirmat. Let's kick off the show by taking a look at how the markets are faring. The budget rally clearly has come to a halt for the benchmarks, with the Nifty trading at 14,765, down by about 28 odd points. SENSEX is down 175 points as we speak. But the broader markets, look at the resilience they continue to show. Mid cap is up 1.1%. Small cap is up close to 1.3% in trade. If you look at sectoral performers, barring Nifty Bank and Nifty IT, all the other sectors firmly in the green. You have the likes of Nifty Auto up 1.7%. Metal Index is up 1.7% as well. PSU Bank once again looking very buoyant, up 1% in trade. You also have Pharma Index bounce back quite smartly. It's up about 0.8%. M&M ahead of its numbers tomorrow is the big gainer on the benchmark index. It's up 4.5%, followed by the likes of ONGC, Hindalco, Coal India, GAIL. So lots of PSUs really catching up as far as the market up move is concerned. You also have Shree Cement up 2.2%. Bajaj Finance continues to be firm in trade, up 2.2% as well. You have IOC, JSW Steel, NTPC, another results candidate to watch out for. As far as the broader end of the market goes, you have the likes of an Apollo Tyre up 8.5%. They delivered a stellar set of numbers last evening. There's Manappuram. Let's pull up the Buy Now, Sell Now stock cloud as well to help you understand which are the stocks to keep on your watch list this morning. Starting with earnings candidates, Bharti Airtel, Indian Hotels and City Union Bank. Three stocks to watch out for in trade as far as earnings reactions are concerned. There's also Inox Leisure actually, which delivered its numbers yesterday. Of course, they were weak given the lockdown woes, but they've already begun the process to reopen in several states, and that's an update that's keeping the stock in focus. Hero MotoCorp, the numbers will be out later today. They also set up a dedicated vertical for Harley Davidson, an update that they informed the bursars last evening. Prince Pipes, another results candidate, another name from the broader markets that continues to shine in trade. You also have Hindustan Aeronautics in the limelight. They've bagged an order for 83 LTA Tejas. And there's Asian Granito in focus on the back of a bulk deal. Rajasthan Global Securities has bought close to 7 lakh shares there. NTPC, another name from the PSU basket that's buzzing away in trade. Results expected later today. Let's see how that pans out. And finally, Manappuram Finance with a stellar set of numbers, hogging a fair share of limelight. Varun.
Okay, thanks for that, Karunya, and good morning, everyone. There's been a very key development that's come up today with respect to the BPCL privatization, and it seems that an interministerial group will be meeting to discuss that specific divestment. My colleague Karishma Asudani is now with us on the phone line, who's breaking this story. Hi, Karishma. What are you picking up from your sources?
Right, Varun, what I'm picking up is meeting and discussion is on NRL, which is Numalik Refined Limited. It's a subsidiary of BPCL, where BPCL holds about 61% stake in it. I'm picking up that discussions on stake sale of NRL will be taking place, where it's expected that it could be sold off for a whopping 6,000 crore as part of its strategy to divest stake in BPCL. The government last year had decided to carve out NRL from BPCL, but yet, of course, there's such plan that's set in to decide how the process will go ahead. We know that in terms of privatization of BPCL, the government is at least expecting about 2 lakh crore, and like Madam Finance Minister had mentioned, by September they see the stake sale to be completed.
All right, Karishma, thank you so much for getting us up to speed with what's happening there. And it's quite interesting. Budget just concluded 3 days ago, and already there's an interministerial meet to discuss how to fast-track the BPCL privatization process. So clearly the government's being quite proactive on this one. Thank you, Karishma. But stay tuned to ET Now today, because we're going to be getting you caught up, and also during the course of this show, with a lot of managements who recently put out their earnings. We have Union Bank joining us, we have Jubilant Food, and of course later in the day, banking heavyweight SBI will be in focus once those numbers are out. So stay tuned to ET Now for all of those. It's now time, I believe, to talk technicals and fundamentals with our experts. As always, Kunal Bothra and Saurabh Jain are with us. Good morning, gentlemen, and thanks for taking out the time as always. Great to have you on BNSN. Kunal, what are you picking up in terms of the charts today? Anything particularly standing out to you? And of course, what are your calls for our viewers?
So good morning, Varun. It's been a range-bound session, I would say, for the indices so far. And there are a couple of reasons for that. I think there has been some built up on the option side on the 14,700 put options. There has been a heavy amount of built up that generally happens when traders anticipate that that's going to be probably a floor or a level of support for the index. And if you've seen the intraday charts for the index, we bounced off exactly from those levels on the Nifty. But on the other hand, there has been a unwinding of positions at the 15,000 call option, and that's going to be very, very interesting, because that generally happens when traders expect or anticipate that the index could probably surge past those kind of levels as well. So this is going to be interesting, because this being the first expiry after budget, I would expect the index to move up higher from current levels. So even though the index is a bit muted in the first half and in the first couple of hours, I believe that the pace could pick up over the next couple of hours. Now, in that aspect, would give two buy calls. First one is a buy on Lupin. I think the stock is heading towards a very strong breakout. Post result, the stock had corrected 10% from 1100 levels to almost sub 1000, but now it's recovered more than 61.8%, which is a typical retracement which we look out for in terms of a reversal for stock prices. So that could be one of the reasons why I believe Lupin could probably try and play a strong catch up from current levels. Expect a target on the upside of 1150. Would suggest a buy with a stop loss at 1000 levels. The second is from the mid cap name, and it's a buy on AB Capital. It's a very interesting chart on the daily as well as on the weekly time frame. It's forming a classic bullish flag pattern on the on the prices, and the breakout of this pattern is approximately at 92, 93 levels. So I believe the stock crosses about that 92.5, 93 levels and probably closes about it today as well. I believe it could result into at least a 15 to 20% upside breakout for AB Capital. So would suggest as a buy, more of a high risk trade because of the mid cap nature of the stock price. Targets of 110 and stoppers could be kept at approximately 80.
All right, Saurabh, could you also tell us what your picks are for the long haul?
My both ideas would be a low risk. First pick is from the capital goods sector. I would recommend Kalpataru Transmission. If you look at the order book of the company, it is more than 30,000 crore, including L1 orders. The company, all the activities have resumed to near normalcy. The company wants to be debt-free by FY21 by selling its transmission assets and want to be a global largest EPC company. So we are having a target of about 395. Second call will be from the real estate sector, the Brigade Enterprises. It is a Bangalore-based company having interest in the real estate, rental and hospitality business. Nearly 75% business comes from the residential real estate. And the company is having good amount of cash. The sales have returned to pre-COVID levels, and the company is quite optimistic about its future projects, which are in the Bangalore and Chennai market. So we are quite positive on this stock, and we are having a target of about 300.
All right, Saurabh, thanks for that, and thank you, Kunal, for your picks as well. Let's now get on with our individual queries from the people writing to us. Girish Khanna of Mumbai has written to us, and he's looking at Intellect Design, and he'd like to know how the chart is looking. Kunal, that stock, I think, has been on circuit now for 2 days post numbers coming out, which I believe were very good. How do you feel in general about small to mid-cap IT, which is very momentum-driven, versus the large companies? And what's your specific call on an Intellect?
So I believe that the overall space is quite attractive. IT stocks, we've been discussing this time and again, that how many of these stocks in this space look fairly attractive. But and the best part about the IT stocks is that it's not just restricted towards those large cap IT names and very, very few handful mid cap IT stocks, but it's spread across the board, where you've seen very strong surge of momentum across the mid cap and the large cap IT. So now being very specific towards Intellect Design. The only catch with these kind of names, one is that it's a high beta stock and it tends to move into periods of circuits. Now, circuits on the upside, of course, would be very good for investors who have bought into the stocks at lower levels. But when assuming the stock corrects and drops into a downward correction as well, those lower circuits may also not help. Trying to exit if someone is looking to exit as well as trying to book out profit. So that's the only catch with these kind of names. But other than that, I think the charts for Intellect Designs are extremely positive. Long-term breakouts. The stock has already confirmed 3-year, 4-year kind of a price pattern breakout, and which is why you're seeing this momentum continue for Intellect Design. So it's a good stock to hold from a longer-term view. But the only catch is the I would say slight illiquid nature and the nature where the stock goes into circuit kind of zones.
Saurabh, your view on Intellect Design and any other mid-cap IT names that you would like to flag off to our viewers?
The company basically provides solution to the banking and insurance industry. If you look at the recent numbers, they have posted good set of numbers, about more than 20% growth in revenue and bottom line. The company sees good opportunities and good deal pipeline in the FY 21-22. They are saying that the amount of investment they have done till 2020 is doing very good for them, and now they are into second phase of investments. So I expect the company to continue to post good set of numbers. In the mid-cap IT space, I think Cient is or Mindtree have posted good set of numbers. Albeit, I'll advise to stick with the large cap names like HCL Technology, which is doing extremely well, and the valuation re-rating is also on the end.
Okay, all right. Moving on then to our next email query. This is from Yash Mehta based in Mumbai. He wants to invest in Cera Sanitary Ware. He's also been following the management commentary, and he knows that the management has said the demand has never been higher. He wants to know both the technical as well as fundamental views. Kunal, Cera, good up move seen, especially if you see the last 2 days, almost 200 rupees added on that counter. Is it a good level to enter, or should he wait for the stock to cool off from these high levels?
I think the stock is at an average kind of a level. It's not that the stock has run up too high, in the last few days. The pace of rally for, stocks like Cera have been very staggered and very consistent kind of uptrend. So I think that's the best part about, stocks like Cera Ceramics and such other names in the same sector. The hindrance for these kind of names also is the illiquid nature. So I think if you look at the volumes today, for example, even on a high denomination stock like a 3,500 kind of a denomination, the volumes are just 8,000, 9,500 shares, and on an average the volumes have just been around 15,000 to 20,000. So that's again the feature to look out for, because it's an illiquid name. So I think that's the catch towards the trends for Cera Ceramics. But other than that, I think the price trends are stable. If you're looking, for example, to enter, then I think 3,000.
Talking about being on the call yesterday, and the Cera management said they've not seen demand like this in around 8 to 9 years. So what would be your call?
You're extremely right. I mean, they are quite optimistic about the next few quarters. They are into ceramics and sanitary ware and faucets. The company is giving a guidance that because of the home improvement that is going on, the improvement in the real estate market, they might be going about 1.5 times the way the things are moving, and they are doing extremely well. They are also in the trading activity also. So, they have posted a good set of numbers, but I believe that the coming quarters would be extremely well for the company. So I am quite optimistic. One can keep holding on the stock.
Okay, so thumbs up, I guess, for Cera Sanitary Ware. Let's move forward. Dhruv of Delhi wants to invest in Ram Krishna Forgings. Kunal, I know it's a smaller company, but to an extent, it's quite a coveted stock. Do you have any technical insights to offer here?
So I think it's an excellent trending stock. I've been tracking the stock very closely since last so many years, And there was this period where Ramakrishna Forging or RK Forging, as it is known in the NSE symbol, I think had trended exceptionally well. Remember, I think 2013-14 the stock was at in 100 odd rupees, 120 odd rupees, and at one point it managed to rise up almost 6x or 7x. So it's a stock which has shown strong potential in its previous history or its past history, and which is why I believe that trends into these stocks can last a bit longer. I think at 565, 570 where it's currently trading, it could be an attractive bet from a longer term view. So your time frame has to be long term. If you're investing into stocks like RK Forging, volume mixture, the price trends have been very strong and stable, and I would expect at least a target of 700 to 750 if you have a time frame of at least 18 months on the stock.
Sort of with the CV sector bottoming out, demand picking up locally and globally, is it a good time to perhaps invest in a stock like Ramakrishna Forgings?
Well, if you see the last quarter's numbers, they have seen good amount of growth in the US markets and as well as in the domestic market. The company is guiding that the OEM have actually upwardly revised their targets for their sales numbers for 2021, and the company is quite optimistic with respect to the rising raw material cost. The company has even guided that they have a 3-month clause in their contracts, and if raw material cost gets increases, they can pass on to the consumers to their customers. So I think in the quarters to come, and in fact in the March quarter also, the company would continue to post good numbers. We are optimistic on this stock.
Okay, so it's a consensus call, consensus thumbs up to Ramakrishna Forgings. Thank you so much, gentlemen, for joining in this morning, sharing with us your market view, stocks, as well as advice for our viewers. Slipping into a break here, more updates and management interactions when we come back. Stay tuned.
Hi, welcome back to ET Now. You're still watching Buy Now, Sell Now. Some good news. In the last 20 minutes, the market has recovered quite sharply, about 60, 70 points. We've just breached 14,800. We're sitting at 14,811. Metals, media, PSU banks, and auto today leading the charge. With that, let's now go over to the management of Union Bank. Mr. Raj Kiran Rai is with us. Good morning, sir. Thank you for taking out the time to talk to ET Now. Obviously, on many counts, the quarter isn't like-for-like comparable because there's been amalgamation and that's skewing the numbers. But you can tell that NPA pro forma are quite high and provisioning has also been elevated. So are you fully front-loaded on provisions now for the coming quarters? And will they moderate going forward? Or are they likely to stay at these levels for at least the next 1 or 2 quarters?
I think the stress because of the COVID is more or less getting crystallized. By our performa NPA is also indicate a stable number, which can further go down. So, but then assuming that that number will continue, we have kept a provision of almost 3,400 crores for the COVID-related stress. So I think that is sufficient according to us in case the same number is getting crystallized after the Supreme Court judgment. So I think the COVID-related stress is more or less crystallized now. We have a fair estimate of the numbers. We have disclosed those numbers. So I don't think it will go beyond this.
Right, sir. And switching away from asset quality, looking toward growth a little bit, what's the outlook on the retail book? It's grown quite well, and disbursements here seem to be actually outpacing other areas of the loan book. So is that a trend that you see continuing?
Retail, actually, we are growing at around 7% as of now, because the first 2 quarters were comparatively lost quarters. So third quarter, it has stabilized. So we are expecting a double-digit growth in retail space by the end of the year. On the corporate book, actually, the growth has been very muted because of lack of availment. Even the sanction cases were not availed. We are expecting that to pick up in the last quarter. So we are likely to end up with a credit growth of anything between 4 to 6% for the year.
Thanks for giving us some color on the retail book. Can you tell us how are the other loans performing, and is Can you elaborate more on what you were saying about corporate book as well? Is it likely to see a rebound eventually in the next couple of quarters?
Yes. We have a sanction pipeline, substantial sanction pipeline, which can result in even close to 10% corporate credit growth. But then that again will depend on how much of utilization will happen in the Q4 and how much will get spread over the next year. But then, yes, we have a robust sanction pipeline.
And what about the deposit franchise? How is that faring? It's scaling up quite well. So if you could tell us what is the outlook on Casa?
Our savings deposits are growing at around 12%, which is a substantial growth. So we are also focused on improving our Casa percentage in our liability franchise. So we have crossed 35% Casa levels now. So the Casa growth is very good. So we are aiming to reach 40% Casa levels in next 2 to 3 years. So we were not very aggressive on mobilizing time deposits because we don't have any resource constraints as of now. So the focus on Casa is there, and we are aiming to reach 40% level. We have crossed 35% levels as of now.
Right, sir. And what's the outlook on your collection efficiency going forward?
Collection efficiency is approximately around 85%. But then this is stabilizing and it is improving. So recoveries are coming with a lag because we had a substantial COVID impact. So the collection drives have started now. It is more of very soft recoveries as of now. So month on month, it can be around 85%, but then the accounts are not slipping because the collections are happening with a lag.
Right, Mr. Rai. And finally from us this morning, capital adequacy. Do you have sufficient capital for growth and maintaining elevated provisions in case they do have to continue? And wouldn't a raise definitely be required if provisions are to remain elevated for, let's say, the next half year or so?
See, what we need now is more of growth capital because the provisioning cover, if you look at the PCR at 86%, so we don't have much provisioning requirement going forward because the provisioning level of 86% is quite high. All the legacy NP accounts, the provisioning levels have reached 90 to 100% levels. So we don't need capital for provisioning now. So that's the advantage. So whatever profits we generate will go for growth capital. So concerned our bank, we raised about 3,700 crores of Tier 1 and Tier 2 during this period. We are also planning to raise some more equity during the Q4. So our CET1 at 9.2 is very stable. So we have enough capital and with the less provisioning requirements going forward. So we need less support from the government for the capital part because the last 3-4 years, the capital came mostly to sustain our provisioning, high provisioning level. That part is over now. So I don't think we need the capital for provisioning. So growth capital we'll be able to generate. I am very sure of that.
All right. Thank you so much for chatting with us in detail about what's happening at the bank and the outlook for times to come. The stock looking very upbeat, up almost 3% as we speak. Let's step into a break here. But before we do that, just wanted to flag off a quick programming reminder. The budget is over now, but all eyes will be on the MPC meet, which will end tomorrow. Only time will speak what action the RBI Governor Shaktikanta Das will take to arrest the spike in yield and high borrowing plan of the government. Also on the rate front, will the committee maintain status quo or not? Stay tuned to know what it is that the street is expecting from the policy meet outcome tomorrow. Welcome back. Still watching Buy Now, Sell Now right here on ET Now. Focus on Motown then. M&M in top shape and in top gear. The biggest gainer on the benchmark index today. In fact, you have a note coming in from Morgan Stanley as well. They've maintained their overweight rating on the stock. The target that they flagged off is 1,112 rupees a share. They believe that the stock has entered an earnings upgrade cycle. There's ROE focus, macro tailwinds. These are essentially the key drivers which will lead the earnings recovery going forward. As macro cycle turns, the company will benefit on multiple fronts. They also said that stronger than expected monthly sale has driven their earnings upgrade. The focus of the company on ROE expansion and valuations keeps them overweight. So there you have it. Solid rally coming by on the stock price of M&M.
All right, thanks so much for that update, Karunya. Let's now move forward. We have a special link from one of our researchers, Vinny, on Prince Pipes. And of course, there's been a lot transpiring at that counter, and it's also very linked to the entire home building materials and real estate space. Let's go across to her.
Prince Pipe surely is piping hot in trade today. It's up as much as 10% and it's gained the most in 6 months. An interesting trade coming in over there for Prince Pipes. Surely on the back of a strong set of numbers posted by the company in Q3, an impressive beat on all counts by the company. So that is mainly driven by the operating leverage, a good superior product mix, as well as the inventory gains did benefit the company in the Q3. And the volume growth of the company has been the best amongst its peers. So surely very good set by Prince Pipes, and a lot more triggers also for Prince Pipes coming in the future as well, the positive triggers as well. So that is something that we're going to talk about. Now, one of the positive triggers is the tax benefits for affordable housing is surely going to be boosting the demand for housing as well as building material products, and that is surely does include the piping segment as well as the Jal Jeevan mission, which is for the urban side of our universal water supply for urban local bodies, is surely going to give Prince Pipes a further push and further benefit. Now, other than that, like I mentioned, increased demand for affordable housing, diversified revenue resources also is going to mitigate the concentration risk for Prince Pipes. Surely something positive and we should watch out for. Agri, plumbing, SWR pipes, these are 35% of their revenue, so that you could see that rural side also is something that could further push Prince Pipes even going forward as well. They do have better pricing power on accelerated consolidation, especially from coming in among the organized sector, shift from unorganized players. Surely going to be a key positive for them, and ability to pass on price hikes is also quite great in the piping companies. So that is surely benefiting Prince Pipe as of now, and that is something that could be a key trigger for Prince Pipe going forward as well. And we are seeing the stock rally also since the last 1 year. It's up 120%, 6 months it's 200%, almost more than 200%. Last 1 month 26% itself. So surely an interesting play coming in for Prince Pipes today, surely buzzing on the back of its earnings, but more positive triggers going forward as well.
All right, Vinny, thank you so much for bringing us that update. And of course, Prince Pipes is quite an interesting company. Do your own research before making any investment decisions. Let's move forward. It's a day of earnings and big earnings. We have SBI that's going to be putting out numbers. Now, the advantage of going last, SBI pretty much is the last big heavyweight bank to report numbers, is we kind of have a flavor of what to expect, right? So even in the case of SBI, the first thing we know is that provisions are likely to remain elevated, and they might even see a 15% jump Q on Q in this quarter. NII is coming off a very high base. So last quarter, they pretty much had peak NII at 28,182. So while there will be some improvement, it's not going to be a big jump. Brokers think 28,600. Profits at the operating level are where you're seeing a big jump. So 18,400 versus last quarter, 16,400. So 2,000 crore increase in operating profit before provision. And that's why your PAT is also looking higher Q on Q by around 2,000 crore at 6,400. Versus 4,583 last quarter. So that's how the three headline figures stack up. Loan growth should come in at a moderate 3%, and of course pro forma NPAs commentary around provision and extent of that will also be keenly looked out for. But SBI is not the only heavyweight stock to be putting out its earnings today. We have auto heavyweight Hero, which is also going to be coming out with numbers. So Karunya, I know you've been taking a closer look at that. What do the brokers have to say about what we might expect here?
Well, it's likely to be a mixed bag, really, because yes, they've seen a 20% volume growth in the quarter gone by, especially driven by the festive season that fell in Q3. A significant part of it did. So, revenue definitely is likely to be up about 35% at 9,480, 9,500 is the range that we're pegging revenues to come in at. But PAT is likely to be flat at 900 crores. We expect even the operational performance to sort of witness some kind of pressure, primarily owing to adverse currency movement and increase in commodity costs. So despite good volumes, despite better scale, we expect Hero MotoCorp's margins to witness a contraction year on year as well as month on month, quarter on quarter, sorry. Margins are seen at 12.9% versus 14.8% compared to the same quarter last year, and sequentially we're expecting about 80% basis points worth of negative impact because of commodity cost margins. But there's lots to watch out for as far as management commentary is concerned. Channel inventory levels, demand outlook, customer response for new products. More importantly, what has been their market share in the premium segment, because that's where all the action is, and that's the segment where all players are right now sort of trying to up their game. The company's view on commodity cost trends, the steps that they would want to take to mitigate that, further cost controls or further price hikes perhaps that one should be preparing themselves for, if any. These will essentially be the points to watch out for as far as Hero MotoCorp's commentary is concerned. The numbers possibly will come out after market hours as always, but let's see how it fares. Right now the stock is looking quite okay, quite comfortable in trade. But let's shift gears and talk about what's happening in the retail and apparel space. We caught up with Dollar Industries MD Vinod Kumar Gupta, who shared their Go Green motto, from effluent water treatment plants to using renewable sources to curb pollution. He shares the company is contributing to the sustainable movement. Listen in to how they're doing it.
Talk to us about the importance of sustainable practices. How is Dollar Industries working to give back to the industry, to give back to the society?
For us, going green is a way of life, and it's been adopted by whosoever is working with us. And we are also trying to have our associates and everyone who are associated with the company to go green and have to take care of the industrial footprints. In this entire scene, we are having one state-of-the-art processing unit in districts of Erode in the state of Tamil Nadu. There we are maintaining a zero effluent system, zero discharge of any kind of chemical into the land of this country. And we are with the zero discharge. We have installed effluent plant into our processing unit, so that we are taking care of the environmental pollutions, and we are with zero emission of pollution into that plant. Besides that, we have our own 4.95 megawatt wind power, and we used to consume that electricity being generated out of that 4.95 megawatt wind power into our spinning mills and the processing unit. There also we are going green. And recently we have also installed a 4 megawatt solar plant very near to our spinning mill in the district of Dindigul. That's also a mission towards going green. So once you look at even in Tirupur, in our factory, where we have got the stitching and the cutting units, we have installed a solar panel on the roof of the entire factory building, so that we leave lesser industrial footprints, and our mission for going green is really been adopted by the entire organization.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. Time to unveil our daily quiz answer. Today we asked you, given that Polo Tires was hogging a fair amount of limelight, we thought we'll ask you a question on the company. Which auto segment does Apollo Tyre have the highest revenue exposure to? The options were two-wheelers, farm and off-highway, truck and buses, and finally light trucks. The answer to this question is option C, trucks and buses. Let's pull up the names of the quiz champions for the day. We have 3 winners: Sanjay Tamrakar, Himanshu Kumar Godbole, and Shyam Mohan Palapetta. Congratulations, guys. Thank you so much for participating and for getting this right. More importantly, congratulations once again.
All right, and on that note, completely out of time here on Buy Now, Sell Now. Thanks for watching. Stay tuned to ET Now.